Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Biora Therapeutics, ticker symbol BIOR. And so here I am recording this on Friday, October 18th, during market hours, about 15 minutes after the markets opened. And Biora is currently trading right around $5.40. Started lower on the day, opening at a price of $5.20, which was the low so far for the day. Up a little bit from there, but overall it's down about 3% on the day. Was up to a high of $5.69. But of course, the market's open, those numbers are going to be changing. But the big reason why I wanted to go over Biora is because they did carry out a 1-for-10 reverse split today on October 18th. And so all of the levels that I had drawn up on the chart were all screwed up because they were, current price divided by 10 lower. And so I just drew up some new levels here. Wanted to go over. I'm not going to be going over any Fibonacci levels because, I do think that there's just a lot of information on the chart, a lot of levels here to be considering. And also something that I have been trying to exercise myself has been working with stop losses. I currently don't have one with Biora. I do have a position, so, disclosure there. But I do think it is good to be managing risk, especially with how volatile the markets have been, reaching new all-time highs. Eventually, there might be, a reckoning. And so I do think it is good to, manage that, especially with a stock that, is as speculative as whether, it's Biora or just being in the biopharmaceutical space. These companies can go bankrupt. So good, to be managing risk with that. And so, I do have all these levels. I just drew them up this morning. And so I am going to go over them with you guys. But before I get into the levels, this is something I typically forget to mention in my videos, is just going over the RSI and the MACD. And so looking at the RSI, I actually think that, big picture, looking at this time frame, the chart looks really good, and so I will go over that, and I do think there are some levels for managing risk, i.e. stop losses, so I will go over those. But just looking at the RSI, when price hit this low of $4.70, post-reverse split, that was hit on, October 2nd, hit a low of 470. And that took out this prior low that was hit on May 23rd of $4.75. And so when we took out that low, we see the RSI dipped below 30, so that is in the oversold territory, and that, is suggesting there's a discount. And then we saw a pretty big reversal, only resided below 30 for about a week before going up. And on the day, we hit that lower low of 470. The RSI was at 2360, and we are now with the RSI for the day so far at 4008. I believe that will be changing throughout the day. So, it's gone up a lot, and, I do think that it could be, having formed a bottom there at 470 or at 475 here. So I do think that looks good. Also looking at the MACD, the histogram numbers here, you can see the values here that do change as the cursor moves over it. We can see that it has flipped green. It has been green for a little while. It has been positive, the MACD versus the signal. That histogram value is green. It's positive. And so I think that with the RSI, I think it's looking good, although I do think that we could be seeing a pullback, and so that could represent a discount dip buying opportunities as long as we hold these levels that I had already talked about, 475 and 470. Really, I think those would be kind of like levels to have a stop loss at. And like I said, I don't currently have one, but in putting this video together, putting these lines up on the chart, I am considering it just because, I end up holding the bag for a really long time on positions. And this one might be, if this reverse split doesn't work out, if the stock price doesn't go up as a result of it, this might just continue to bleed. So I would think that 470 is a good stop loss level. If that gets filled, then we're putting in new lows. And, this time frame from the low over here to this new low, that was 132 calendar days or 90 trading days. And so if we're putting in, a new low over the course of it's like 4 months, something like that. I think that, 4 months from now, we could potentially be putting in a lower low. And so I don't want to see that. I don't want to just be holding for months and months while this is bleeding. So I think that 470 is a good level for managing that risk with a stop loss. But of course, that could just be selling the bottom. But the thing about this that makes me kind of intrigued, thinking that 470 could be the bottom, is we hit this low of 475 and then spend 90 trading days above that. And so one might think, oh, I'm going to manage my risk. I'm going to put a stop loss at 475. I don't think we're going back there. But then here on, October 2nd, we swept the lows. Anybody who had a stop loss there got pushed out of their position, and now current price is trading above that. Not much higher than that. If we do take a measurement from that low to current price, it's only up about 10%. So it's not a huge difference. But I just think, from a psychological standpoint, as markets tend to work, as I am learning, trying to get better with stop losses, this does make sense, sweeping those lows or, creating a spring that then price could be going higher. And since that low from October 2nd, that is exactly what we have seen from this orange uptrend that we have here. And so I'm just going to zoom in to go over some of these levels on the more near-term time frame. We can see that we have been putting in higher lows. And so I think that's really good. We did sweep those lows. Now we're putting in higher lows. So I think that that could be suggesting the bottom is in here. The trend is kind of reversing, and now we are going to be going up. And so this uptrend is based on these two lows here, one being, of course, that all-time low, or at least 52-week low of, it says up here, 47 cents, but that is after reverse split, $4.70 from, October 2nd, and then the other pivot point being the low from October 11th, which was a low of $5.30. And so I would look for that trend line to hold. If we start breaking it, if we do get a lower low, then let's see, this is the low from the 11th was $4.90, getting below $5 a share. So I would keep that in mind. If we do get a close below 490, that could be kind of like a caution sign that we might be heading back to 470, but it could be a fake out break. Happens all the time. Just like this was a lower low and we have since moved higher. Even, just from hitting that low up to this high here, just over the course of those 3 trading days, if the dip was bought here at 470, that went up 25% just over the course of really, 2 trading days following that low. So I think it's good to be thinking about this from a psychological standpoint. Maybe 490 is a good level to be really, aggressively buying the dip. And then, if we do then following that hit 470, that might be the level to cut the losses at. Going down from 490, if establishing a new position, coming down to 470, that is, a drop of less than 5%. So I think that, is kind of a nice risk management strategy for this. Get a fake out break below this uptrend, that we could get a close below that, maybe around 490, maybe a close below 490, but that could be a fake out break of the uptrend, and then we start to go higher. And so I think that 490 could be, a nice level to either establish or add at with managing risk at 470. So, in going over in this video, that's something that I might actually do. I did place a buy order, which I previously had at 470, which, I had filled previously at the low of 475, kind of in that same mindset, placing a buy at the low. Then that's just going to be buying as it bleeds. I don't think that's a good strategy. But buying at 490 could be a nice dip to take advantage of while managing risk with a stop loss at 470, with then a lot of upside potential, getting that average down if one already has a position like I do. So I personally am intrigued by $4.90 or maybe $5, that being a psychological level that, where the cursor is right here, 501 or $5 right there. That also being, let's see, what was the open price on the 11th? The open was $5. So yeah, I think that $4.90 up to $5, that could be a nice dip buy zone, cutting losses at 470, and then maybe walk away if that happens, because I think it could be months of bleeding again, or maybe we do hit a new low months down the road. So good to consider that. But anyways, enough of like this risk management where the bottom might be. But really, with this uptrend here, maybe we don't go back to 5. And so I would look for the low of today at $5.20, that to potentially be holding, and that would be suggesting or demonstrating higher lows. So I think that could be really good, even though, here you can see we did put in kind of a double top here, a higher high there before pulling back. But, I do think that we need to be showing signs that we are respecting these levels, whether that's this uptrend, $5, $4.90. All of those are key levels below a breakdown to 470 and lower. But yeah, getting onto levels to the upside, I do have this orange downtrend drawn here, and that is based on the high from July 17th, which was at $7.90. Also have the other pivot point, rather than going from the high of September 3rd, which was at $7.10, I did it with the high from August 30th, which was also the open, and that was at $7.09, so just being 1 penny lower than the high from September 3rd, so the following day on, I believe, Monday, which was, that was over the weekend there. And so, yeah, I've got those two pivot points there, and the reason why I drew it from the high on the 30th rather than the high on the 3rd is because it does look like we got a very nice retest of that level here. So the high on September 17th was $6.79. Looks like we got a wick up to just about that level, just, kissing it before getting rejected. And so I think that downtrend is going to be pretty significant if we do get up to it. We might be getting rejected again, but then maybe, finding again support here. And as I am recording this, the market is open. We have hit a new low for the day of $5.11. Look for $5 to hold, look for $4.90 to hold. And if that doesn't happen, I think, 470 is going to be on the table. But yeah, I think this downtrend, I think I'd recommend, at least, the reason why I point out these highs, these pivot points, is so you can draw them on your own chart. So if you're looking at the chart, don't wait for the next video that somebody puts out on this, whether that's me or somebody else. Just put this line up on your chart just to monitor it, to see if we're getting rejected there or to see if we're breaking out, which, here you might be thinking, oh, we're getting above this level, but we need to be seeing a close above it. We need to be seeing some strength above it. And this was just a couple days that getting rejected here, getting back to it, but just getting rejected before moving down. So do look for that. And so I will take a step back so we can look at this yellow downtrend here. But I did want to, while I have it pointed out here, zoomed in on the chart, go over this level at $7.90. And so that is actually a double top that we formed here. These highs were at the exact same price. The initial high was from June 6th, $7.90, and then we also hit a high of $7.90 on July 17th, double top there. So I think that's going to be some notable resistance. So I would look for a rejection right around $8 a share if we are to be breaking out from this downtrend. If we do break out from this downtrend, though, whether we get rejected at around $8 a share or this yellow downtrend, we might be seeing a pullback, a retest of the scene of the crime, which could be, this orange downtrend. So do look for that, as it has been resistance in the past. I think it will be a tough level to get above, but as time moves on, that level does get lower. And so, just like the probabilities of breaking above it get higher as time moves on. But also, if we do get rejected from it, we're getting rejected from a lower level, just like we got rejected here from a lower level. So good to keep that in mind. But if we do break out, maybe we get rejected around $7 or $7.25, right around where this downtrend intersects the y-axis here, and then maybe we see a pullback to around 6 or maybe 575, retesting that orange downtrend. But now I am going to take a step back to look at that yellow downtrend that I have drawn here. And so that is based on, let's see, I'm just going to actually zoom in a little bit here, adjust that axis so we can see the full frame, all of that price action. And we can see this yellow downtrend. It doesn't have much of a slope, but that is based on the high following this gap down, the high from April 1st. That was at a price of, let's see, $8.19. And then the other pivot point was from the high of June 6th. That being at 790, where I have this horizontal line here. We got a double top there. As you can see, that downtrend is a little bit lower than that high. And so I could see that being resistance. So good to keep in mind. And so with these two downtrends, if we do break above them, we may then be later retesting them as support. Since they are downtrending levels, that might be pulling back to a lower high than when we broke out, but that could still then be acting as support. So do keep that in mind. And then also in this time frame here, I do have this gap that does need to be filled. That is at, believe it or not, at exactly $11 a share. That was the closing price on March 28th before we did have this massive gap down. And so I expect that we will be seeing a lot of resistance there. And so for me personally, I don't know about you, my average is above $11 a share. I believe it's around $15.50. And so, ideally for me, I would like to get my average below $11 a share. So if we do go up to this gap and we do see resistance there, as people who are buying here, have been holding the bag this entire time, and, they might want, a breath of fresh air to offload some of their holdings at either break even or, at a slight gain if they were accumulating some down here, getting their average down. And with that being said, there is this gap up here that might be getting filled. I suspect it will be later in the future. But if it is to not be getting filled because those who had an average at $11 a share, maybe they got that average down, maybe they would be selling a little bit lower than $11 a share. I think $10, getting into the double digits, that does make sense as a level of resistance, being psychological, as well as being slightly lower than this gap. If people did get their average down, they might be, either whether it's cutting their losses, getting, just 10% away, or is that 9% away from $11 a share there. With that being said, they might be trimming there, either cutting losses, or if they got their average down, taking some profits, or, at break even, right around $10 a share. And I do have this green line drawn at $10.10. And that is based on this pivot low from March 14th, which is Pi Day, have fun with the dates, have fun with the numbers. And so I think that could be a level of resistance, which is just about a 2x from current price. And so, that is really just like the time frame that I am thinking about. I didn't want to extrapolate too many Fibonacci's or, anything like that going too far back in time, because we have really just been consolidating here at the bottom. And, one could think, is this either accumulation suggesting that this would be a bottom, or is this distribution suggesting that price would be going lower? And, from my standpoint, what I went over in the chart, with the stop loss level at 470 and hitting a lower low than 475, I feel like this does look like accumulation. Of course, I could be wrong. Of course, we could be hitting lower lows, but with this reverse split now behind us trading above $1 a share, having put in a lower low here at 470, but now hitting higher lows. With these levels to the upside, I think that we'll be hitting them. But with that being said, if one was to aggressively buy the dip at around $5 or $4.90, I would think if one was being aggressive with that, I think one needs to draw a line in the sand, and that is at 470. I think that's a stop loss level. But of course, as I do like to have fun with the numbers, maybe the new low ends up being 469 and we end up regretting cutting losses. At 470, and then these moves start to get filled. So maybe a stop loss at 468, just having fun with the numbers there, 469. Maybe that's a good strategy. And if that means cutting a loss, like I said, I believe my average is around $15 a share. If that means I'm taking a more than 67% loss on this, that sucks, but time, would be eating away at this, as well as that number, that percentage loss going higher. And so, I'd rather walk away with 33% of my investment than 20% of it, and also having that time to then pivot into other positions. So yeah, I'm intrigued by a stop loss at 468, allowing for the possibility of a new low of 469 to happen, and then, for these levels to start getting filled. So, I'm intrigued by that. I am discouraged by, how boring the chart has been over the past year, especially with it being, fairly disappointingly boring, as we did have this high here, really, at the end of February 28th, we hit a high of $19.90. That was pre-reverse split adjustment. That was at $1.99, so just below $2 a share. I could see price getting back there if we are to get above this gap at $11 a share, start to hold that as support. But I do think that there is a long road ahead. But I do think, like I said, this makes me think it is more of an accumulation pattern, boring us out of our positions. And I think that the bottom is likely in at 470, or maybe a new bottom at 469. So I think there's a lot of hope here. But if I'm wrong, I think that, then who knows how low this is going to go, and maybe this goes down to $1 share again, and there needs to be another reverse split. And I don't think it's worth holding between now and then, if that is to be the case, if we are to be breaking lower than 469, having fun with the numbers, and having it on the table to really make some gains, whether that's getting up to $11 a share, $10 a share here in green, $19.90 getting up to $20 a share, or going back to these prior highs here, 67.65. I wonder what this high is. That's in the 70s, maybe $69 a share, $69.42. That might be a fun one. But yeah, that's probably years in the future. But I do think, as I had said, and I will end on this, that I think this looks like accumulation, and this might be a dip with a stop loss at 468. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. You guys take care.